Hi everyone and welcome back. In the second half of 2020, the Indian real estate industry had a bit of a resurgence with growth and the green shoots of recovery being seen. However, the second wave brought a halt to a lot of that momentum. Now, with things opening up again, and since we're halfway through 2021, I thought it would be a good time to look at the growth and recovery prospects for Indian real estate in the second half of this year. So, today we're going to talk about the current situation in real estate, the differing recoveries being seen in the residential and the commercial sector, some reasons for optimism going forward, and finally, some factors that could affect the recovery in this industry. The very nature of the pandemic caused it to affect the residential and commercial sectors in this industry quite differently. When before, a lot of us would spend the majority of our time in our offices, that situation has been completely reversed in the last year or so. After the lockdowns last year, there were a number of factors that let the real estate industry recover. Some of these were government incentives, such as the stamp duty cut and income tax incentives for buyers, while there were also historically low home loan rates hovering at or below the 7% mark. All of these factors helped boost sales, as can be seen in the Mumbai and Pune region in the last quarter of 2020 and even the first quarter of 2021. These factors, along with the impact of work from home, pushed a lot of buyers to make purchase decisions that they potentially had been holding off on. In an earlier video, I spoke about the prospect of a K-shaped economic recovery in India. A K-shaped recovery takes place when different sections of the economy recover at starkly different rates from a crisis. Some reports suggest that we can see this K-shaped recovery in the real estate industry as well. Overall, since the lockdowns of last year, residential sales have recovered quite well. Residential sales in the first quarter of 2021 were actually even higher than the average pre-pandemic levels of 2019. The recent resurgence in demand had actually caused property prices around the country to stabilize, with only Mumbai showing a 1% drop in property prices in the first quarter of the year. The sector also seems to be pivoting a little more towards affordable housing, which is driving new supply and a lot of the transactions in major markets. While we are seeing a strong recovery in the residential real estate sector, the same cannot be said for the commercial sector. Net office absorption, which is the total space take up minus the spaces being vacated, is down 42% from the last quarter and down 48% from the first quarter of 2020. At the same time, office leasing is down 25% as compared to the first quarter of last year, with a lot of companies looking to re-evaluate their real estate portfolios and to streamline their operations. Further, the activity in leasing seems to be concentrated around a few core markets and sectors. In the first quarter of the year, Bangalore actually made up 48% of this office absorption, up from 31% in the previous quarter. The IT sector remains a driving force in terms of leasing, with the IT and health and pharma sectors combined making up 47% of leasing activity in the last quarter as well. Another point to note is that the nature of work itself might be changing. A lot of companies are looking for a distributed or hybrid workforce model, or maybe even a hub and spoke model that we've spoken about before on this channel. For example, the number of flexible seats rented by enterprises has gone up 58%. Most of these seats tend to be on shorter contracts and more flexible for the tenant. We will have to see which of these changes end up becoming permanent, as a survey from Space Matrix pointed out that over 30% of employees actually felt that their work-life balance was better while they went to an office. Talking about commercial spaces outside of offices, there has been a lot of pressure on malls and retail lending as well. We mentioned this in a previous video, but a lot of malls tend to use rent discounting, that is, taking loans against the rent receivable to them. This has caused a lot of problems for mall operators who are looking for some sort of relief or moratorium while people still cannot visit malls. There are, however, some reasons for optimism. While the stamp duty waiver may have expired, a lot of the key drivers behind residential demand continue to be in place. Home loan rates remain low, and government income tax incentives, especially for affordable housing, continue to remain in place for another year. Developers have also adapted to this new reality and are better equipped than they were at the same time last year. However, as we have spoken about before on this channel, the larger developers with a track record and importantly access to institutional investors are those with a better chance of getting through this market cycle. There are also some factors that could affect this recovery going forward. While some developers may be expecting pent up demand after the lockdowns, just like there was last year, a new report by Quantico shows that things may not be as simple. That research suggests that precautionary saving has increased, with consumers becoming more risk averse as the uncertainty increases around them. The depressed levels of consumption may last longer this time, resulting in a slower U shaped recovery as compared to the V shaped bounce back in consumption that we saw last year. Further, for commercial real estate, a return to offices for a lot of employees may hinge on the rollout of vaccinations. Alright, everyone. The evidence seems to suggest that the recovery in the real estate sector will be quite different for residential and commercial markets. While there is a lot of uncertainty going forward, it seems to be the case that residential real estate will have a much faster and stronger recovery, at least in the near term. However, these are uncertain times, and the events of the next few months could determine whether commercial real estate can start gathering some recovery momentum of its own. I hope that this video explained the current conditions of the real estate market and the prospects for recovery for the second half of 2021. As always, if you enjoyed the content, please do like the video and subscribe to the channel as it really does help me a lot. See you again soon and thank you.